Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's a TGIF, folks. Let's make it a great one. Market-wise, let's take a look at it out here. We have the Dow Industrials down 27, NASDAQ up 3, S&Ps are flat. Gold contract, check this out, folks. It's up 27, but from highs to lows, you're talking about in this gold contract, it was about as good as you can get. You're talking about wide price spread, accelerated volume, all the above, 1146 to 1192. We get the price, we get spread, we get it all. Bottom line, and we'll get our heads wrapped around that. Let's go right over to King Dollar right now. King Dollar, folks, that's it. That's it with King Dollar. King Dollar got up, tested the highs, did 53,000 contracts, got to a price point today of 88.36, gave it up. We've had a price spread in King Dollar of 913 ticks. What that leads into at this point, we'll see what kind of retracement we get. I expect we're going to see a normal retracement will bring it down to 83.99. 83.99 off of 87.66 is going to basically put selling in the S&P. It's going to put buying in the commodity market. We go to the silver contract. Silver finally had a sign of strength out here. What silver did, silver goes from a price point of 15.25 up to 16.30. Big number, no doubt. Has the juice behind the move. On silver, the difference with silver and gold is we want to see silver take one more leg up. You take one more leg up like you did today, then silver would be heading for the $21 level, which no doubt is a big number. Bond market, we take a look at bonds. What we have with bonds, bonds just refuse to back down, folks. The 10-year out here is at 126.21, and the setup is really sweet. And this is why the setup's so sweet. We did 1 million contracts out here today. And that's not a huge amount of contracts. The 10 years can do 2 million, 1.4, 1.5 real easy. But what we have is this. When we went up on the 7th of November, we got to a price point of 126.24. We did that with 1.6 million contracts. Next day, we did only 900,000. Gave it up. But when we came back with anemic volume. We never even got to the swing low, which is 125.727. Then what ends up happening, we're pushing into the swing now with volume. And this is where this gets really intriguing. And this is what it is. So the November 7th high is 125.27. You get into that, and then your next stop is going to be the lows of the highs of September 15th, and that's where this baby wants to go, which is the 130.17 mark. Higher prices in the bond market, lower yields are coming at us. 30-year, same setup. We did 247,000 contracts out here. We're at 141.20. That swing up there that's going after is 141.31. That's going to do it in a heartbeat. And then what you're going to see is that once you get into the thing that's amazing about the 30 leads this thing. You get into 142.13. That's the low of the high. That thing's just going to move. Okay, King Dollar. Let's get over to King Dollar. So King Dollar this morning, folks, 0730. It's running into its swing high from last week. Dramatically lighter volume. At 0730, we had 17,000 contracts. So as it was getting over there, it was really sweet. Why? Because absolutely zero contracts early in the morning. Oh, sorry, folks. Excuse me. Bottom line is that it gave it up in spades, came down with volume. I suspect what we have now is that you're going to see King Dollar go lower, commodities go higher, and let's go over to the oil market. So CLZ4. Oil, ABC structure down to the $70 area. We made it to 73, I think. Okay, so oil, where is she? Okay, so oil, here we go. Oil out here today, we got to 73.22. I suspect that's probably it. Why? We did 130,000 contracts. You get under the low, had lighter volume. Oil's down from 101. You know, that's a big number. That's 25%, folks. It's straight down, by the way. what you'll see now is that now you're going to see a good counter-trend bounce going. Now, this is where it's going to get really intriguing because the counter-trend bounce and oil can get you up to 84 in about a heartbeat. Commodity-wise out here, what you have percentage is this. Silver was up, is up 4.4%. Gold's up 2.4. Crude's up 2.4. You get gasoline up 2.1. It's a shame, I know, at the gasoline. Gasoline did get under $2 today. It was a $1.99 wholesale. Bottom line, you know, we'll see where this shakes out. S&Ps. Now, let's go to the SPY. So we have with the SPY is this. SPY right now, 204.55. 5 days we've been in the exact same spot here. We'll see where this baby can close out for the week. The 203.59, which it looks like we're going to be above, that'll be another week lighter volume. If you want to see the characteristic, it's pretty intense. Meaning, so your swing point is 201.89 on a weekly basis, 561 million shares. We came up to the swing the week of the 31st with 592 million. That was 3 weeks ago. Last week we did 475 million, and this week we are at 348. So you can see the correlation. Higher you get, in this case, tiny bits higher, and the volume is dropping off beyond belief. That is distribution at highs, folks. That's how this baby's set up. If you've been listening to the financial press, it's about as good as you can get. And what I mean specifically by that is that you're hearing the word safe on a continual basis. It's pretty amazing. When I was out for about a half hour, I was coming back to the office, and they were doing it was a technical guy, which is really weird, on Brian Sullivan's show. And what he said is that, oh yeah, it's safe to be in the market right now. I said, oh, this is really interesting. Safe. Listen, the markets go up and down. You know, last 5 years have only gone up. There's no such thing as being safe in the marketplace, folks. Okay, that word in particular. When you hear that word, you hear that word at highs when everyone kicks back, grooves. Hey, it's safe. Everything's cool. Yeah, right? Really? 877-927-6648. Let's go take a look at the XAU, the HUI. XAU, HUI, bottom line is that these things are going, folks. They've tested, retested, got into the lows, shook everyone out. Bottom line, they want to go topside now. XAU up 384 at 70.55. HUI, we go take a look at the HUI. HUI up $8 at 166.54. In both cases, what you're going to see is that you tested lows, did it with lighter volume, rejected lower price. And the lower price that we rejected in both cases, folks, was the lows of 2008. And the HUI, that number is 150.27. It made it down to 146.01. Lighter volume. The XAU, we take a look at the XAU. What you have with the XAU, the low of 2008 and the XAU, 63.52. We made it down to 61.39. Lighter volume, rejected it. The hardest part to believe is that they actually came all the way back to the 2008 lows and whacked those babies. And if you want to take a look at one that was giving the biggest signal, and I know if you've only been to a couple of my workshops, it was absolutely blowing my mind that an Eagle had a high volume low at $20.87. Then it went all the way up to $88. Well, it got back to $22. You know, never made the low, had lighter volume. We just tested that this month. That's going to be lighter volume. Now she's getting a sign of strength. She's going to be out of here. Bottom line, you get high volume lows out there, high volume highs. Keep your eye on them, folks, because they're going to get tested. Some of the Dow stocks. We take a look at some of the Dow stocks. American Express is down 63. Oh, let's go to the IBB. The IBB is screaming, folks. It's screaming that it's going south. Wide price spread, accelerated volume, breaking a swing point with volume. 1.7 million shares today. It's blowing away the 286 at 1.3 million. This thing's going south. What is that the heads up for? That's a heads up. Almost a year ago, February, the IBB was what led the NASDAQ lower. This is Tom O'Brien. This is TFNN. Dow right now is down 30. Nasdaq's up 2. S&Ps are off. They're flat. We're going to be right back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials right now down 31. Nasdaq's up 2. S&Ps are flat. Inside the Dow, let's take a look and see what is moving the Dow out here. You got Cisco is the leader in the Dow right now. That's up 61 cents. Big Blue, which is a dog, is up $1.30. Big Mac up 67. Intel is up 22. Taken away from it is you get Merck down 60 cents. Travelers is off 96. You get Johnson & Johnson down 92, and Nike is off 70 inside the NDX 100. What we have inside the pushing it higher, you get Akamai Technologies up 224. Amazon is up 1154. Oh, let's go look at Amazon. Let's go look at this baby. So Amazon, oh, you're going to love this. Amazon's going to be a nice little setup, folks. So let's go through Amazon here. Up $11. We're trading at 328. We put this back on a weekly basis, and what you're going to see is that you're coming into the downdraft that was created. Well, first off, the high in Amazon was last year. The high is 406. 408. 408 was the, yeah, actually, so it was the first week of January this year. 408. 408, you know, we're trading at 328. What Amazon is doing is going into the downdraft from 364 to 314. That downdraft had 10 million shares traded. You know, you're going up this week with 5.7. So we'll do probably 6 million shares. I'd let it get into this a little bit more because you probably can get up to about 3. Actually, this is interesting, right at 329. Yeah, maybe 346. Bottom line is that Amazon is an equity that does want to go south. This is probably the deal they had with one of their publishers. They put that together. The next one that's putting juice into the NDX 100 is NetApp. That's up 129. You get Baidu.com up 669. Taking it out is all the biotechs, and this is where the dangerous cut. So check this out, folks. It's going to be intense. You get Biogen is down $12. You get Celgene down $3.89. Alexa Pharmaceuticals off $6, and Illumina is down $5. When these things move, man, do they move. They get out. They just don't have a regular elevator. They get their high-speed elevator, I mean, beyond belief. So if we start with a GILD, what you'll see out here, GILD going after, oh, this is going to be a heads-up just in the market in general. GILD has the high-volume swing, as the whole market does, on October 15th. The high of that low is $97. The low is $91. You're at 101, and you get an expansion of volume. And that's after the Gilead went from 91 all the way back up to 116. So you're talking big money. Oh, my God. 16, 91, 26 points. Yeah, you're talking about it almost went up 20%. Goes up 20%, finally comes down another 20%. CELG, Celgene. We take a look at Celgene. What we have with Celgene, she's off the top with volume. 377. I wonder what's hitting these things. They're just selling. That's the bottom line. They're selling in AMGN. Let's see what Amgen's doing. Amgen, the Amgen's not bad. That's only down 370. And REGN, let's see what that's happening. That's not bad. That's only down $8, but that's a $394 stock. ILMN. Now this one here can really get hit. Yeah, this is down $5. Not that that's that bad, but when this thing goes south, man, does it go south. It takes no prisoners. And what you have here with a lot of these biotechs, like this ILMN, this thing can basically just implode, absolutely implode. You know, you're at 179, and I mean, it's going to go test 127, but you don't even want to hear where it can actually go because it's low, low, low. We go take a look at the XLE. So the XLE, okay, so the XLE is up 86 cents today, 14 million shares traded. Yep, this is not done going down either. So inside the XLE, of course, you got ExxonMobil is the mover, largest weighting structure. Yeah, she's not going anywhere. ExxonMobil, we're at 94. That's going to go down to test this 90.61. Chevron would be the second one in there. Chevron, same setup. Let's go to the banking sector. We go take a look at the XLF. Okay, so we got a turn here. It's going to be interesting on the XLF. The XLF has stayed at its highs. Let's go to J.P. Morgan. We take a look at J.P. Morgan. Yeah, J.P. Morgan wants to go south. This is pretty cool, folks, because J.P. Morgan is trading at 60.30, and she's going to go at 57.38. That's the high of the low of the 15th. And right now, today, you have J.P. Morgan inside its lower range. BRK. Now, Berkshire Hathaway is the largest weighting structure inside, and there she goes. Okay, so she's coming off the highs also. Nothing heavy, but she's coming off the highs. She's already tested the high, so 142.45 is the number. She gets inside that, she's going to go a lot lower. Let's go take a look at STT. This is State Street. State Street, the lows 62, the high 78. Now, State Street, folks, is one of the largest back offices on Wall Street. I mean, in an extraordinary way, too. So we take a look at the State Street's at 76. Yeah, that's going south. So State Street's already inside the lower range. It's at 76.08, 76.78 gets it inside the range. That sets up that, yeah, it wants to go down and test this swing low that from the October 15th level. Let's go to Mike in Toronto. Hey, Mike, what's going on?
Yeah, hi. Thanks for taking my call.
Sure.
Yeah, I want to look at the SCO.
SCO, that's the ultra-short Bloomberg crude oil. This is twice the inverse correlation of the daily performance, whether negative and or positive. Okay, so what are we doing with this?
Buy, sell, hold.
I got to figure this one out first because, one second. So, the Bloomberg Crude Oil Exchange Traded Fund seeks daily investment that corresponds to twice the inverse opposite of the daily performance, whether positive or negative.
Mm-hmm.
The fund tracks a multiple inverse of daily performance of the crude oil sub-index. Now the question is, what is the crude oil sub-index? 1 second.
Yeah.
Do you know what it is?
It's tied to the futures contract.
Okay, so this is just crude oil futures then, right?
Yeah, basically, yeah.
Okay, so if it's crude oil futures, what I don't quite understand would be SCO.
I think they trade the front month. They're trading the front month futures contract.
Yeah, but so watch this. The futures are up, and this is down.
That's correct.
Okay, 1 second, hold on. Then
That makes sense.
why? Why does that make sense?
Well,
Oh, I see. Okay, because it's the inverse. I got it. Okay, thank you. I got it.
Okay, I just want you to look at it technically. Like, do you see a channel being formed to the upside? Do you see anything like any Tiger Gartleys or anything? Anything in this formation right now?
Well, first, I hear you loud and clear, but first you got to get straight what you're trading, okay?
Okay.
So,
I know what I'm trading. Yeah, I've been trading for 5 years.
okay. So you understand that if oil's up, this is down. No, if oil's up, this is down. If oil's down, this is up, right?
Yeah.
So do you trade it every day or do you hold it?
Sometimes I hold it. Sometimes I do day trading.
Yeah. Okay. So my take now is that oil's going back up, so this is going down.
Mm-hmm. Okay, that's it. Thank you.
Okay, man. Have a great one. Have a safe one. Stay right there, folks. Come right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full custom optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is down 15. Nasdaq's up 7. S&Ps are up 3. We get gold up 28. Silver's up 70. Platinum is up 17. You get oil up $1.77. Copper is up 5 pennies, and King Dollar, she is trading at 77.62 from high to low. That was 916 ticks. So let's go bring the continuous contract up, because I believe that this is going to be it on King Dollar. And so continuous contract, it got to 80. I think it's going to be really weird if it just tested it once again. I think it's the same number. It never actually got there. So, yeah, 88.36. And it was trying to get to this 88.80. We get the confirmation. So this is how this shakes out. We're at 87.62. Next week, you close below 87.24, and that's it. Now, what's going to get interesting here is that what is the type of retracement that we're dealing with? When these things go, meaning trend. They trend for a long period of time. If you look at the dollar, in 2008, bottom line trended for 5 months from $71 up to the 89. Then we trended for 8 months on the way down from 89 to the 74. Trended for another 6 months on the way up, 8 months on the way down, 8 months on the way up, sideways for a few months. Then a very shallow retracement. Now, the shallow retracement gave you the heads up that, guess what, it wanted to go to this 88 level. So we'll see how it backs down. If you back down under the 83.67, then you're going to have some big action in the commodity market, because then it would be a move all the way back into the 79 level. And the way to set that up, folks, is that you can do the correlation between the dollar, the S&P, and the commodities. I mean, because the bottom line, it has been tick for tick. As this pulled off today, and this was one of the keys this morning also, is that the dollar, was up like 400, 450 ticks this morning, and the S&P couldn't move. That correlation in itself was like, oh, really? I was in front of the screen. I'm saying to myself, okay, that is a separate correlation. And, of course, one was going to win. My expectation was that the dollar was done, and that's what ended up happening. But it could have been the other way around. That divergence, though, is crucial to understand. Because when you have divergence in the marketplace, one's going to win. Once it comes out and you find out who it is, then it's a lot easier to set up the rest of those trades. The reason being, of course, is that then what you're going to see, just as we had out here today, is that you get the wide price spread, you have the accelerated volume, you have the gold equities, the silver equities, they're all moving higher. Market hasn't really moved at all. That aspect with the market not moving is actually more bearish. The reason being is that the way that the market takes the most amount of money away from the most amount of people in the least amount of time, that's the deviance inside it. In this particular market here, because we have come back from the dead so many times, in particular coming back from the dead on the 16th and 15th of October, that's a big number. So we'll see, and this time of the year. So there's a lot of things going on simultaneously inside this market right now. Small caps, they haven't been able to get up and to higher price. Now, this is going to be another heads up. This is really a subtle heads up, but this is really important to understand. Okay, so the small caps, the IWM right now is flat. What should be happening inside the small caps, folks, is a huge amount of commodity stocks. With these commodity stocks higher and dramatically higher, the small caps still can't get any traction. What that's saying is that, guess what? Out of the 5,000 small caps in there, what you have is that you have the commodity stocks higher, but they evidently are more lower than higher. That's a big heads up. It's, because when you see these gold stocks moving, the silver stocks moving, the small oil stocks moving, they're all in the small caps. They're all in the Russell 2000, Russell 5000. Bottom line, it's not making a difference. What does that mean? That means that you have more selling than buying in the whole total structure. 877-927-6648. Let's go take a look at the good old BAC, Bank of America. Bank of America, okay, so here's another financial, can't make the highs. The highs that we're talking about out here is 1741. Right now you're at 1713. And you tested a swing point. It's going to be, so check out this test. This is pretty intense. This test is weekly basis, 247 million versus 510. Intense. Let's go to Brent in Martinez, California. Hey, Brent, what's going on?
Tiger Tom, how are you?
I'm doing great, man. You having a good day? I know you're having a good day.
I'm having a golden day.
I know, man. It's about time, right? No doubt, man.
I know. It's been a painful ride, but I think we're finally getting what we want.
No, I do too. I agree, man. And you know what I haven't brought up yet, folks, okay, is all the 13Ds and 13Fs are filed. And I'll go over that, the next break I'll go over that with you. But you'll see that a lot of these funds coughed up a lot of shares, and a lot of other funds came in and bought. One of the most surprising things, I tell you, was Morgan Stanley came in and bought 25% more position in the GLD. That was one of the biggest ones I saw. I said, well, this is interesting, man. So we're looking at Gold Corp, right?
Yeah, you obviously know a lot about these companies just fundamentally. I bought some shares when it had that day where it got down to 17.
Yes.
And actually, so I bought it at 17.75, and it's something I'm planning on hanging on to. I bought Royal Gold at that last real ugly dip when it got down to 45 range. I bought some of that, and stuff I'm going to hang on to for a while probably. So.
Well, this is the time, man. I mean, there's no doubt. And, you know, with Royal, so watch with Gold Corp. The high volume swing low is 1384. You made it down to 17. You did it with 187 million shares versus 421. That's telling you the rest of these gold stocks, except for this and AEM and Rheingold, did not break their swings. They got close to them. So that's saying that these are the strongest stocks inside that pool of gold stocks. So, what you want to see with Gold Corp is that once you get back inside 22.22, then you get some juice, man. 22.22 is your next level. But as to making money, Gold Corp's a great stock. Gold Corp, they had made a mistake when they bought Glamis. Well, we were glad they did because I owned Glamis at the time. Glamis was a higher-priced gold producer than Gold Corp. Gold Corp was one of the lowest-priced producers at that point. Glamis was a higher-priced producer, but they had a decent mine. They take in plenty of bread. You take in $3.8 billion a year, and they still have one of the best producing mines, meaning inexpensive. It's in Canada. They're in safe jurisdictions. You got some action here, man. And of course, if we go over to Royal Gold for a second, Royal Gold right now, she's trading. This is going to be a little powerhouse. So Royal Gold is at 67.63. She's on the way to 69.30. She takes out 69.30, and then you're going to see 75 pretty quickly. And if we go to Franco-Nevada, so Franco-Nevada and Royal Gold are the same deal, folks. Not the same deal, but the same type of business arrangement. And this Franco-Nevada is at 52, and it's on the way to 57.12. So there's action out here, man.
No, it's nice to see finally.
Well, particularly on a Friday. What you have here, it's really together, folks, meaning that you had the dollar get up to the high, give it up. Gold got down, and it didn't break the low today, but you had plenty of fear, okay? This is prior to the market opening, meaning gold opens at 820. You had the fear in there. Gold was down $12, ended up being up $28. So that's what you need, basically to cough it up. I can tell you here. We'll just pull a couple of these up right now. You're going to be able to see it. So these filings just come out today, folks. Now these filings are as of September 30th. So you don't know what happens after that, but I can tell you, with September 30th, I'm looking Fidelity coughed up a third of their position. No, 20%. Let's see, 25% of their position they coughed up. They probably coughed up more of it after that. That's really unusual, But guess what? It happened. You coming into it, and this is what was so amazing about Gold Corp. I was watching this. Whoever this is, Salinger Stone Capital, they scored beyond belief. They came into Gold Corp and bought 11.8 million shares, folks. 1.46. And let's see. They're at 1 California Street, 30th floor. This looks to me like this looks like to me just a private company, man. Well, I guess it's they got a lot of resources. They got a lot of resources in their portfolio. I just pull up the portfolio. Cooking, brother.
All right, thanks a lot, Tom. Have
a great weekend, man. Have a safe weekend. 877-927-6648. Dow Industrials are up 17. Nasdaq, Dow's down 17. Nasdaq's up 7. S&Ps are up 250. We're going to be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. When you first learn something in life, you have the most questions as you begin to apply that knowledge, which is why Steve Rhodes came up with the idea for his 7-week trading program. It all begins Saturday, November 22nd, when Steve Rhodes will host a live 3-hour morning workshop where he'll teach his attendees the precise methodology he uses when placing trades. You'll then receive 6 weekly updates each Monday morning discussing the possible alerts currently setting up in the market. Steve will then bring everyone back together for a final 3-hour live workshop Friday, January 9th, where he'll discuss the methodology that went into each of the 6 weekly updates, making sure that you're confident in applying what you've learned so that you can begin navigating the market on your own. You can sign up right now for this entire 7-week trading program with Steve Rhodes for a one-time payment of only $395. If you're a Mastering Probability subscriber, then you can save an extra $100 off that price. For all the details, visit the front page of TFNN.com right now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Dow Industrials right now are down 27. NASDAQ is up 6. S&Ps are up $1.50. And, folks, as you come over to our website at TFNN, what you're going to see right on the front page, right in the carousel, you're going to see 7-week training program with our man, Mr. Steve Rhodes. This is going to be an outstanding program Steve has set up. What you get is this. You're going to get 2 separate 3-hour webinars. The first webinar is going to be on the November 22nd. That's going to be from 9 o'clock in the morning to noon. What Steve's going to go over with you then, he's going to go over the different patents that he's looking at, what you're going to do when you're buying and or selling. Then he's going to follow through with you for 6 separate weeks, right after one and right after another. And then, what a beautiful thing this is, he's going to be doing another live workshop so that everything that you've learned, you're going to be able to put to use in a live workshop when the market's open, 9 to 12 on the 9th of January. You can sign up for that by just coming over to TFNN right on the front page. Steve Rhodes, what's going on?
Hey, gold's going to the moon.
Oh, man, let me tell you, man, it's amazing that, you test, and then you go. It's pretty intense, man. It really is.
It was kind of interesting this morning as gold was moving lower. If we used one of your techniques, which was taking a look at the 10-minute chart for gold,
yes,
as it was backing down, it was backing down still with lighter volume to the last upthrust that we saw.
Right.
Yeah, and it wasn't until you were on with Daryl and all of a sudden I was like, oh, isn't that interesting?
It was intense, there's no doubt. And, there's always something that, there's not always something that's very clear. But that dollar index this morning, Steve, was like, oh, man. I said, it's over it. And what's so weird is that, it wouldn't test it, meaning the 88.88. And then when I saw it with only 15,000 contracts this morning, I says, oh, no, it's not going to make it, man. It's just not.
And so I heard you talking about that, so I jumped down and I looked and I was like, God, both of them were lining up, just like that. And that just goes into, one of the things that I look at for my subscribers and I teach to folks that attend the workshop because the data's right there.
Yes.
Is how to analyze the commitment of traders data from the CFTC, which comes out every Friday at 3:30, depending on holidays and so forth.
Sure.
And, what I've been telling subscribers now for the last 4 or 5 weeks, it seems like, is that they're positioning themselves in the U.S. dollar index. They are at net long position. The longest percentage of open interest, the highest percentage of open interest, what I should say, as far as going net short the dollar.
Okay.
Net short the dollar.
Okay.
Which as the dollar's moved up, I'm kind of like how and. The exact opposite of the trade, which is they've also gotten to the least net short position in gold and in silver. So they're expecting big bottom in the metals, big top in the U.S. dollar index. And then when it pulls off, when you get the volume tests like you were looking at, it's just, like as you say, like I don't want to steal your thunder, but it is a beautiful thing.
It is, man. It's a really beautiful thing on a Friday, I can tell you, man. Because what happens, folks, is that, it's like you don't know why they like to go to these swing points. And it's like, okay, we want to test it. And what happens is this. One test, is not bad. But when you test 2 or 3 times, your probability goes much higher, okay, that the test is complete. And it'll be just like us working out. You work out once, you go back, you work out again. If you work out and it's too close every time, well, guess what? You're going to be weaker. That's kind of how these tests normally work.
Yeah, for sure. And then the 13F filing information that you've got. So, what I've been working on over the past couple of days and will over the weekend and next week is the workshop that you mentioned that begins next Saturday, November 22nd, from 9 to 12. Is really, because it's a 3-hour session and it's jam-packed, what I want to provide to those folks that attend, it's just simply, look, if I do something, it's just like you. If I'm going to do it, I'm going to do it.
Sure.
There's no partial way. And so it's truly the best of the best. So it is packing in the absolute, it was like, if I were to start today, what is it that I would want somebody to teach me?
Right.
Just take me right there. Just tell me what it is that I need to know, what it is that I need to focus on, what are the best patterns, what are the actual secrets, the so-called trade secrets, that to put it all together. And that's what next Saturday is going to be about.
What's so cool, too, Steve, is that, and folks, this is on a Saturday morning. So picture, he's going to lay out the rules for 3 hours, and it's going to be archived on your page. But that is really neat because it's great when the markets are open and everyone understands the patterns and everything else, but it's really cool when you can do them and you have clarity and thought process and no one's looking at the markets,
Well, what's actually kind of nice about it, I was speaking with an extraordinary trader a couple hours ago, and what we were talking about was, and what's going to be nice about Saturday, and as you just pointed out, it's being able to lay out the rules, and here's what you do when this happens.
Right.
And that way, we're not focused on what the markets are doing. We're not multitasking. Somebody's listening to a workshop yet watching what's going on in their positions.
Exactly.
And when we talked about this, it's like, and here's what you do. And, the interesting thing is that one of the, trading is psychological. And so we try to utilize these tools to help us with that. But as I was talking about, what you'll find is that, and this applies to really all of us. It's that, if you're sitting there waiting for price to come back to where it is you want to execute, when it gets back there, right, what happens is, your palms start to get sweaty, your heart starts to beat a little faster, maybe you start to get some butterflies in your stomach, and you're wondering whether you should take the trade. But you got to fire away, because the folks that don't fire away, they're going to say, because that's fear, and that would stop them from taking action. If you were talking to the individual that didn't have that same fear, guess what? Those same attributes happen. It's like if you were to talk to Bruce Springsteen and ask him what he felt like when he went on stage, he's going to tell you that his stomach gets tight. He's not stage fright, but his stomach gets tight. His palms begin to sweat, and then he gets out there. And if you ask David Letterman the same thing, who does have stage fright, he'll tell you that the feelings are the emotions when he gets on, before he goes on stage, his palms get sweaty, his heart starts to beat faster. And so it's just about being able to channel those emotions to be able to pull off what you want. So the market's not open. We get to look at these patterns. When this happens, when this occurs, you do X.
Right.
And here's where you set your stops and things of that sort, and that will be cool. And then we've got, 6 additional weeks, 7 weeks of follow-up before we then go to a live trading session on a Friday on January the 9th. So it's a good way to get in before Thanksgiving, have some hand-holding. It's all about really me being able to get folks to take action and be able to understand what I think are the absolute best patterns out there. So I'm looking forward to doing it next Saturday.
Big time. And so, folks, of course, you're in your car. Don't go to the computer. But over the weekend, go to TFNN. You go to the left-hand side. See it right in the carousel at the very top. You're going to get 2 webinars, 2 separate 3-hour webinars, 6 great follow-throughs, and you're going to get our man, Mr. Steve Rhodes, with a great education. Steve, you have a great night, safe night. Of course, we look forward to the show Monday morning, 9 o'clock.
Sounds great. You do the same.
You stay right there, folks. We'll come right back with our man, Mr. Dave White, and we got Jan Obbs coming up. We're going to be talking about the markets. Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's a TGIF, folks. Got my man Dave White, our technology expert here at TFNN. We're going to be growling a problem with you. We got Jan Obbs coming up next at 4:30. We're going to be talking about the e-signal webinar that they're going to be doing tomorrow morning. Right now, though, we get our quote by Walter Anderson. Believe in something big. Your life is worth a noble motive.
Sounds good.
Why not, right?
It certainly.
Yesterday's gone. Tomorrow's not here. What are you going to do right now? Market-wise, let's take a look at it out here. The Dow Industrial's down 18. NASDAQ up 8. S&P's up 3. Gold contract, check it out, up $27 at $11.89 after we had a price spread out here of $50 out here today. Beautiful thing, folks. Wide price spread, accelerated volume, rejected lows, gold's going topside, dollar's going to hell in a handbasket. I thought you'd never hear that from me.
I didn't hear it.
I know. Silver up 63 cents at $16.25. Platinum up 17 at $1,211 an ounce. Copper up 5 pennies at 3.04 a pound. Light sweet crude up 169 at $75.90. Okay, so oil, folks. Oil's gone down from $100, hit 73 out here today. For all you folks in the Midwest, for all you folks up in the Northeast, heating oil, go fill up the tanks right now, because you're going to get some kind of a counter trend bounce, and that we might have just saw the low in oil, because the ABC structure on the way down was 70. It did multiple ABC structures on the way down, got to a lower low today, had lighter volume, bottom line, and we'll just get into the dollar index. Dollar index today, folks, basically gave it up. Had a price spread of 915 ticks, which is really unusual. You don't have dollar moves like that. Tested the highs, rejected the highs, had lighter volume, gave it up. Commodities in general moving higher. I expect what you're going to see here is dollar's going to move lower, and S&Ps, guess what? S&Ps is somehow, some way, bottom line, they want to give it up. So we'll see where this correlation comes. We started and finished the same place this week. The low of this week on Monday morning, well, the open Monday morning was 2032. We're at 2038. What that does, however, so for you bulls out here, okay, bottom line is that you do have a higher high. So higher high can go higher. The high of last week was 2034. We're higher. That means it can go higher. The volume characteristic is about as good as you can get. Specifically, what I mean is that the contraction on the weekly volume is pretty intense. I mean, it's intense. So watch. So you got a swing point out here that we overtook. The first swing point when we look on a weekly basis, 19th of September, right? 201.89, 561 million. The first week up to that was a good number. That was 592 versus 560. Nice number. Granted, we came down 1.3 billion. Last week, you did 475, and this week we did 367. So we'll see where the whole baby does shake out. But that's saying that the S&P can't get away from this consolidation, this high-end consolidation. Now, Dow's a different ballgame. Dow's way away from it. You're 300 points away from it. I'm not taking a spike of 350, actually more than that away from it. Yeah, you're a good 400, 450 points away from the Dow Industrials. NASDAQ Composite, we take a look at the composite. Composite's not that far away from it. Composite's having a hard time also. Composite's at 4688, and you're about 30 points away from it. As we talk about gold, what we have with the gold market is this. Gold today got down to a price point of 1146. Rejected lower price and just went topside. The gold equities also went topside with conviction, wide price spread. A couple of them actually got inside the larger range. What I expect you're going to see out here on Monday morning, as I was just talking to our man Dave, one of the tigers, the Z in the den, was just bringing up PAAS, and there's no doubt a few of these stocks, folks, they're going to be fast moves. Pan American Silver, up 82 cents. Now, all these stocks have got killed. There's no two ways about that. This thing went down last 6 months, $16 to $10 to $9. But the way I'm just looking at this right now, I'm saying to myself, you know what? These are going to gap open Monday morning. PAS is at $10. It'll gap open at about 11. So
is there a lot of short interest in any of these?
Let's take a look.
I mean, as bad as this has been.
That's only 1%.
Yeah.
Yeah, you don't. That's no. You don't have it. You don't have it. What you have, however, though, when we look at these here, watch this. I'll bring up all the filings are out today. Okay, so if we bring up the 13F filings, okay, what you're going to see is that you're going to see a huge amount of folks coughed up a lot of stock. Now, on Gold Corp, this is pretty wild. So watch this one on Gold Corp. So the numbers you're going to be looking for, if you're looking at Target TV, you want to look on the right-hand side, you're going to be looking at 9:30, meaning the date 9:30. But watch this. Look at this company right here. This company here, they're going to make a name for themselves. Sailing Stone Capital came in and bought 11.8 million shares of Gold Corp.
On gold itself, now that you got what you think is a reversal.
Yeah.
are you looking for anything in the way of confirmation? I know, like the girl from IBD always wants to see 4 days. I mean, is there a price, or is there something you got in your mind now that says that you've got more than a few days bounce out of this and we're going longer?
So watch this. We both know that markets either bust up or bust out. Right? And the biggest confirmation that we have out here when you correlate it all together is that the XAU, the HUI, and by the way, the XAU has a couple dogs in it, okay, tested their 2008 lows with dramatically lighter volume, rejected them. You know, so when you do that, so check this out. This is what someone's saying about this. When you do that, folks, I can make the case that the XAU now is going to go back to 232, and you're at 70.
Well,
which is insane.
Yeah, I was talking to you about the break and before the show, and there were basically a report came out and said that there wasn't any deflation. I don't know, sometimes these things just happen at the same time. There's no alternate history where one happened and the other one didn't today. But
I agree.
You've always been in the camp of not deflation, right?
I've been going back. I've gone back and forth. Because the aspect of inflation versus deflation, I think we've gone back and forth on that quite a bit, because the amount of money that was absolutely lost on balance sheets in 2007, 2008 was a lot. And that unwinding still gets done. In fact, there's a great story today. And what this story is, folks, is this. So picture this. The coming back of the USA, no doubt has come back in the aspect of the balance sheet and the closer you are to banks, okay? Because the Fed poured money into it. But if you're not close to banks, okay, you're in tough shape. That's a reality out here. So, when you hear that I think the economy's doing better. It has a long way to go, though. It has a long way to go in the aspect of folks that are in cities getting jobs and getting jobs in general. And that aspect there has to do with how far it has to do with inflation and deflation. You know what I mean? But at this particular case, when you actually look at, when you still look at food's still really expensive. Yeah. There's no doubt about it. When you go to a supermarket, bottom line, I think one of the saddest things I ever see, I can't stand it actually, is when you see a mother with a couple of kids, and even the husband can be there, and they're looking at the meat counter, and they don't have enough money to, and because it's expensive, man. Yeah. It really is expensive, So in that case, that's a big number.
I saw something. It's kind of tech related.
Yeah.
You know what the biggest problem that car manufacturers have right now?
What?
It's because, remember, all the cows died and all that? It's getting leather seats for cars. They're having very tough time selling cars in China right now. They're having a very tough time at getting enough skins for leather seats in the luxury cars they're sending to... so I thought that was pretty weird. That, you basically have a problem caused by a lot of the cows dying last year, not replenishing it, and now there's, all the unintended consequences of these other things.
And what Dave's talking about, folks, cattle feed got so high, okay, that basically it was too expensive to keep feeding them, so they brought them into slaughter, and they did it on a massive scale.
But some of the car dealers are starting to move down their sales figures for China.
See, we should have known that. We could have bought all those skins then. They were cheap. They were cheap then. You stay right there, folks. Dave White, Tom O'Brien, we're coming right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dave White, Tom O'Brien. Appreciate you growling and prowling on us. Don't forget, folks, every trading day, Dave does an outstanding show right here at TFNN, 2 to 3 Eastern Standard Time. Also has a great newsletter, the Tech Insider. You can come over to our website, test drive it right here, right now. You go to TFNN. Go to newsletters, go to trading newsletters, you see the Tech Insider right there. Today we're looking at Amazon. Amazon calls a truce.
Right. Now, they've been in a bloody public relation battle with authors.
Yes. Actually, the publishers of the authors, right?
Right. Yeah. But the publishers stood back and let the authors say, hey, you're killing us, right?
Okay, right.
So, for the most part, the human person going, you know, you're killing me, Amazon, you're killing. If it was a publisher, probably a little less impact. So they pushed out the authors.
Because no one knows the publishers, right?
They don't really care about them, right? They know Amazon,
right?
But, you know, the guy that I'm buying his books not getting paid, or I'm not getting it.
Right.
Well, for those people that didn't know, what has happened was that several of these publishers didn't like the $9.99 price tag
on electronic books. Right.
They wanted to go to $19.99 for some of them, and $24.95. Amazon wanted nothing to do with it. There's only one problem with that. It's against the law. You can't set prices for everything out there.
Okay.
You can encourage prices.
Right.
And basically Amazon was saying that's what they were doing, but they weren't. They were saying you got to be in here at $9.99 or $14.95 or whatever.
Sure.
You're going to sell twice as many than you would if you put up at $5 more, right?
Right.
Publishers didn't like it at all. They were getting skinned about as badly as the music business when iTunes came out and people quit buying the entire album. They only bought the single track, right?
Sure, right.
So none of these guys wanted to live with that. And, of course, probably the biggest dust-up was with Hatchet. But in the last couple of days, they both signed deals with Simon & Schuster, Hatchet, and some of the other ones I assume will be in the next few days.
Yes.
And we've seen Amazon have a nice bounce today and yesterday a little bit on the news. But for me, one of the things has always been, probably the worst thing that can happen to you is the government drops the hammer on you with antitrust. We saw that in Microsoft. And
Sure.
one of the worst days in the stock market and in Microsoft ever was that day that they lost the court case and they were found to be in, now you got the government always in everything you're doing, sticking their finger in
Sure.
it. Are you doing this? Are you doing that?
So you think that's why they made a deal?
I would think so, because basically the book publishers were grinning a whole lot, and Bezos wasn't saying anything, or Amazon wasn't saying anything.
So who do you think, now check this out, folks, this is pretty intense. Who do you think, because David just told me this, someone bought 70,000 calls yesterday? No,
$70 million.
So check this out, folks. Someone bought $70 million worth of calls of the 300 strike price, right?
Right.
And they went out 2 years.
January of 2017. So they wanted to get through the Christmas rush, right?
They wanted to get through a few Christmas rushes.
Right. So they got it 3 years. And to them, they paid a great deal of cash, like $70. What are they?
Well, today they closed, we just had this, okay,
60,
so 300, they closed today at $78.
Yeah.
But that means they were going to be up big time.
They bought them yesterday at $70.
Okay, right.
So it was one of the largest ever option buys, and a lot of people are speculating about why someone would do this. But if you think that Amazon is going to $1,000, I don't believe it is, but you think it is.
Okay.
You can take off all the risks that you have but $70 for the next 3 years and take the other $230 and put it in other stocks. And that's probably the thinking that someone was long in this. They've been in it long for a long time. And they wanted to get out. They wanted to get out of that position and then put it back in.
Okay.
But since this happened an hour.
So this gets even more interesting, because so you're speculating that they could have been in the stock, sell the stock, say, okay, I want to be in for 3 years. I'll go with the $70 for 3 years. Interesting. Yeah.
Right. And I'll put in the $230 or $250 in other stocks.
My take is that it's someone that knew that a deal was going to get done, and we're going to see that get laid off
because it happened an hour or two before the news in Amazon.
Wow.
A lot of people kind of scratching their heads. But like you say, someone always knows something, right?
No, there's no doubt. No doubt.
To me, on my show, I said, I don't think I'd be short. I didn't know about this deal getting signed.
Yeah, right.
But for me, it's awful tough to be short Amazon going into a Christmas season where every other day is going to be a PR statement saying, we sold more things than anybody has ever sold in their life. And then the day after that, it's going to be, we sold more things than anybody ever sold, including us 2 days before. It's just an endless PR drumbeat.
So pitch it. Even growth-wise, I bet that I'll do probably 500 to 700 times more shopping than I did last year on Amazon. And that Prime is a great deal, man.
It's not that the company isn't a great company. It's that they haven't been able to turn the switch on for earnings, and
I know that. I'm just saying, but for customers, it's great,
right? And we're going to spend yet another $2.5 or $3 billion in the next year,
right?
So now the only downside here is we're going to be paying sales tax. Or do we pay our sales tax already from Amazon? I haven't ordered anything from them lately.
Oh, that means that does it start January 1st, or is it already?
It's whenever this place opens up.
Okay,
I knew it was closed.
We're going to have sales tax now.
So that's the downside. Before you didn't pay sales tax, which was nice.
Right.
But as soon as we've got, I'm probably 30 miles on the other side of town, 20 miles. They're putting in a $200 million facility.
Yeah.
And the nice thing is going to be you're only going to be 1 day for most of the products.
Right.
Right. You're not going to be waiting 3 days. So that whole Prime thing of you getting next day shipment really not going to make a lot of difference to them. Right. But you're still paying for Prime for next day, even though it's local.
But it doesn't cost anything.
It costs you $100 a year, doesn't it?
Oh, yeah, a year. I order toilets and everything, man. I mean, we're ordering stuff for the real estate company. I mean, it's like a no-brainer. Do you know what I mean? I got 2 bathtubs in. The bathtubs alone, weighed 600 or 700 pounds. I'm saying, how do they do this?
By going bankrupt, apparently.
The best part about it is that, you order them, the workers are already there, the thing shows up, they put them in. They actually call you. They give you a set date that's going to come. They call you the day before that. You know exactly. They have a better delivery system. Their span of delivery, 4 hours.
Right.
That's unbelievable.
The other thing is that last year, of course, they got kind of a black eye for not delivering the last few days because of the weather and everything else. Now, FedEx and UPS have hired additional workers. So has Amazon for the last 5 days. And I guess the other question is, can we really put a lot of weight into the Black Friday numbers that day after Thanksgiving now that everybody knows that they can buy stuff right up until the end of the day?
Check this out. This is so cool he's talking about this. I say no.
Yeah, I think I'm
going shopping tonight.
I'm thinking that there's not going to be that one big day other than the sales that maybe Best Buy has or something like that in stores. But other than that, why, if you're not going to go stand in line at Best Buy for one of the ridiculous sale items they have, why even bother?
And it is intriguing, man. I can't quite put my hand on it, but I know that this year I'm going to start shopping tonight. It's like, okay, and I've never gone that early.
I'm on the web. I've signed up for all the websites that have all the hot deals and stuff.
Big time, man.
So I see all those every day, and I'm already starting to pick up things as they come out on
hey, listen, for all you folks that, happen to be in Florida, too, if you eat that bulletproof coffee, right now, Kerry's Gold Butter is on sale. You get 2 packs for $4. You save $3.50 on 2 packs. I bought 16 of them last night.
And this is that grass-fed butter?
You got it, man.
Okay.
You stay right there, folks. We're coming back with Jan Obbs.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. When you first learn something in life, you have the most questions as you begin to apply that knowledge, which is why Steve Rhodes came up with the idea for his 7-week trading program. It all begins Saturday, November 22nd, when Steve Rhodes will host a live 3-hour morning workshop where he'll teach his attendees the precise methodology he uses when placing trades. You'll then receive 6 weekly updates each Monday morning discussing the possible alerts currently setting up in the market. Steve will then bring everyone back together for a final 3-hour live live workshop Friday, January 9th, where he'll discuss the methodology that went into each of the 6 weekly updates, making sure that you're confident in applying what you've learned so that you can begin navigating the market on your own. You can sign up right now for this entire 7-week trading program with Steve Rhodes for a one-time payment of only $395. If you're a Mastering Probability subscriber, then you can save an extra $100 off that price. For all the details, visit the front page of TFNN.com right now. You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had the Dow finish down 18, NASDAQ up 8, S&Ps are up 3.5. Now let's go over to our man, Mr. Jan Arbs. Jan has a great website, first off, folks. It's janarbs.com. That's janarbs.com. Jan is the owner of the Jan Arbs Traders Toolbox. He converts sophisticated trading concepts into trading solutions for traders. He writes software. Tomorrow morning, folks, okay, at eSignal, back in black. You can go to eSignal.com. When you get there, you're going to see at the very top the Education tab. If you hit that Education tab, eSignal is having a webinar tomorrow. It's free. It's going to be a dynamic webinar. It starts at 9 o'clock Eastern Standard Time, goes from 9 to 1. You have a lot of great speakers. We got Dr. J, you got Darryl Guppy, you got Howard Linson, Ron Wheeler, Jan Arbs, and Dan Zanger. Jan is going to be speaking from 11:30 to 12:15 Eastern Standard Time. Jan Arbs, how you been?
Hey, I've been just fine. Can I correct you on one thing, please, because people may miss it? My first name is Jan, J-A-N, and the last name is Arps, A-R-P, as in Paul, S, not B.
Absolutely.
So if you're going to log on my website, it's janarps.com.
Sorry, Jan. Appreciate it, man. So, hey, how have you been?
Well, I've been great. I've been enjoying the market cycles.
No doubt. So tell us what you're going to be teaching at the Back in Black eSignal webinar tomorrow.
Well, we have about a dozen of our tools that are built into the eSignal platform.
Yes.
That they were kind enough to endorse us on that about 10 years ago. And these are called the ARPS Crown Jewels.
Okay.
I've been developing tools for 20 years.
Yes.
And we picked a dozen or so that are our best tools that we call the Crown Jewels, and put those onto the eSignal platform.
Nice.
And I'm going to be talking about how to use those tools to optimize your trading and make the best trades.
Now, I'm on your website right now, and I'm looking, the first one that it pulls up there is cycles. So talk to me about what you're looking at when you look at cycles.
I think it's cycle turning points.
We want all these secrets, Jan.
Well, I'll tell you whatever you know, whatever I can. The cycles is called cycles turning points,
yes.
And it's basically a timing tool. It picks out the peaks and the valleys in hindsight.
Okay.
And looks at the time intervals between them so that we can project some cyclical activities in the price and project those out into the future.
Nice. And I can see inside this you get the Fibonacci, you get the price channels. You know, when we talk price channels, it's intriguing because, you know, the S&P, of course, has been in this monster channel for quite a while. You know, we broke
that. Has.
Yeah. And it was, so what do you think about, you know, when we came down the 15th of October, we broke the channel, but then we popped right back inside it. What does that tell you?
Well, right now we're in a sideways channel. Some of my other indicators are showing that the pressure is to the upside. So
okay.
I think the breakout is going to be to the upside. We have our fear-greed indicator, which is a very popular indicator that's used on the e-signal. And what it's measuring is how much volume does it take to move the price up 1 unit versus how much does it take to move down 1 unit.
Okay.
And this gives us an idea of whether the bulls or the bears are in charge at the moment.
That's an intriguing setup. So what inside of that, right now, of course, it seems that it's going to be less volume to move it up, right?
Yes.
Yeah. Interesting, yeah.
That it's going to take less force to move it up than it is to move it down. So the bulls are in control.
Yeah, we've been going up like for 3 years with light volume. I mean, today it's pretty amazing. But the bottom line is that you get higher price, right?
Yeah, yeah.
You've got the crown jewels. Which one of your indicators is the crown jewel of the crown jewels?
Well, I love them all, but the one that I like to use the most is the ARPS Trender.
Okay.
And the ARPS Trender is basically a statistically based tool, mathematically based tool, that's measuring the trendiness of the market and the direction of the market. And we generally run it with 3 different settings. So I'm looking at the short term, the medium term, and the long term trend. And I get excited when all 3 of them are in sync. But we keep track of the long-term, medium-term, and short-term trends of a large number of symbols as well as the various markets.
Yeah, you can see that there's no doubt that, you know, if you have that harmony, you know, going top side, well, going up and or going down, right? It's pretty hard to, it doesn't hard to break it, but when they all simultaneously are going the same direction, it's like, okay, that's where we're going.
Yeah, that's about right.
You know, Jan, let me ask you, I know that you also, I mean, you're a software writer, right? Also, right?
Yes.
You know, a financial software writer. What has been, you know, and other people come to you to write software, right? Have you got any new ideas in the last 10, 15 years as to how these markets are moving from other people?
Well, everything that I have gives me an idea of what the market, how the markets are moving.
Sure.
And they don't always all agree. It's always interesting to see what kind of ideas people have that they want us to program up. And although, you know, we keep their algorithms confidential if they so request,
yes,
it's still nice to watch and see what's going on.
Yeah, no, that was my question, really. I wouldn't expect you to come out with it, but, you know, it's always intriguing because it seems that, you know, you've been in this business long enough, Dave has and I have, it always seems that no matter how long we're in the business, another light bulb can go off and you think, oh, I got it this time, right? You know, this is it. this is it, right? You know what I mean?
Yeah, sometimes it is and sometimes it isn't.
Yeah, yeah. Has the structure, meaning the ETF structure, that there are so many ETFs now, I mean, it's amazing. I know that you remember when the iShares first come out, and remember Dorsey. Dorsey was saying this is going to change the market, and I think I forgot this other guy. But the bottom line is that they did change the market. Do they change the way that you're even writing some of the software?
Well, not really, because, one of my mantras is a chart is a chart is a chart. Yes. It really doesn't matter what you're looking at or what the time frame is. They're all bars that go up and down, and they have a certain amount of volume that pushes them up and down. And I can take away the time frames, so I don't know what the time frame is. It really doesn't matter.
Okay. Is there anything special you're going to focus on tomorrow?
Well, I am going to focus on the ARP's crown jewels, and I'm particularly going to focus on the triple trender, which is what we were just talking about, the medium-term, long-term, and short-term trends, and how I use this in my daily work. And I usually set up a whole screening window of all the charts of all the stocks that are within a particular category.
Yes.
Right now, I'm really focusing on the oil and gas industry and the shale gale. This is such an amazing thing that's going on, and the stocks are moving very nicely. And I'm keeping track of not only the oil companies, but also the companies that are transporting the oil, the pipelines, the tanker companies, the railroads, and so forth. And I have those all in spreadsheets, and with my triple trender, I can see who's coming up out of the pack and which are the strong ones and which are the weak ones, and recommending those to my clients.
What's going to be cool here, too, is that there's no doubt, you saw the dollar made... it had a reversal of 915 ticks today, and of course the commodities went topside. So that's going to be intriguing, basically exactly what you're doing, because, between those commodities took a hit and beyond belief. But it's going to be interesting if this is the end of the move in the dollar for the, next 3 or 4 months.
Yeah, it certainly will be interesting to watch, and my triple trenders will show me which currency combinations are the strongest and which are the weakest, and which way we think we should go.
That's a beautiful thing. Listen, folks, you can go to eSignal.com. When you go to eSignal, you can hit the education tab. What you're going to see right there is Back in Black. It starts at 9 o'clock tomorrow morning, goes from 9 to 12. Jan is on from 11:30 to 12:15. His website is JANARPS.com. Jan, you have a great night, safe night, and we look forward to the webinar tomorrow.
Well, thank you for interviewing me.
Okay,
look
man.
Forward to it.
Have a great one.
Bye-bye.
Have a safe one. Good night. You stay right there, folks. Dave White, Tom O'Brien. We're going to be coming right back. Our phone number is 877-927-6648. Give us a call, folks. We'll come right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Dave David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien. Welcome back, folks. Dave White, Tom O'Brien. Appreciate you growling and prowling with us out here. We're looking right now. Dave has a slide up. Streaming music that Taylor Swift is has taken the music scene by storm.
She has, but probably the biggest thing for me is Pandora and how that whole streaming business is working out.
Okay.
So last week we kind of talked about her. She's the first person in about 10 years to sell a platinum record. So they are finding ways of selling music, at least she is.
Yes.
My thought Friday, a week ago, was, okay, since she's doing it now, someone else is going to do it. And of course, Garth Brooks on Monday announces his new album. You go to his own website and you buy it off his website, right? So we're starting to see that kind of
breakaway again.
Breakaway. Not only that, but Yahoo announces its streaming music service. And of course, we got Pandora, we got Spotify, we've got all these. It's really starting to get a little bit of segmented out there. And if you're a musical artist, I think you love it. In the old days, you basically had iTunes, and if you didn't want to do iTunes, what did you do? Now you've got a lot of people to play against each other, right?
I don't even think of iTunes.
Right.
You know,
but I mean, before you were stuck.
Oh, that's it. No, it was that period. That's all you thought of.
But now for streaming music, you got Pandora, you got Spotify, you've got all these other places. Now you're going to have Yahoo, or not Yahoo. You're going to have YouTube. So as far as an artists go, it's probably a little bit better. Now, what I dislike is I love Spotify. I use it all the time. It's one of the best streaming music services. What I thought, they haven't gone public yet. Pandora kind of ruined the taste in the mouth for most everybody out there. We were actually shorted in the Tech Insider back when it was in 39s.
Yeah.
And you could just tell that everything they tried, no one was making money.
Right.
Artists weren't making money. They weren't making money, and it's now down to 20. It popped because Spotify and Taylor Swift all week have been in a war of words publicly as a PR benefit. And, of course, Spotify says, well, we're going to pay her $6 million this year. She says that you only paid me $500,000 so far this year. And you find out the truth is she's going to get about $2 million from them. They said 6, so they lied on the high side. She lies on the short side. And it just is back and forth. Doesn't really make anybody really look good, but it does make them look bad. And Pandora actually, kind of a dog stock, popped a little just, I think, on that. That, you know, they're not in the crosshairs, at least for the moment, on how much you're paying these different musicians to stream.
It seems that it's almost like an Amazon thing. The customers are just making out. That's the bottom line.
The customers are making out.
Because it blows. So picture this. It blows my mind that, you know, I use Pandora a lot, and it just blows my mind that, you know, I have plenty of CDs, but guess what? I don't even need a CD anymore. I just play it up, and, you know.
I think that I keep on. And I've said it for a year and a half because I was waiting to short Pandora. Business model is probably fundamentally broke as much as the airline business model was broke for 30 years.
Yeah, right.
And someone's going to have to truly change the way this whole thing works for the artists to make some more money and for the streaming services to actually make money too. I don't know what the answer is. I wouldn't want to be. This is one of these businesses like Groupon that not only are there no barriers to enter? It's just a horrible business model, like the airlines was forever.
Right.
And until they bought oil wells, it didn't make sense.
There's no doubt, because it was always a great business model because you could make an album once and sell it. Now any musician has to travel in an extraordinary way. And that's tough. I mean, some of these people, I mean, they're traveling every single week, and you can only do that for so long. Lost in space, Elon Musk.
Yes, Elon Musk, out of his 3 businesses, I think that his space business actually has the most promise. I think that there's flaws in Tesla, the car business.
I like Tesla. Go ahead.
I don't think that there's anything wrong with the car.
Yeah.
I think that there's something wrong with the business model until they get batteries that are the equal to gasoline.
What if he figures out that we live in an electric world and everything's electric?
Everything can be electric.
Look at your hands going up in the air. It's electric.
It doesn't matter. What if someone comes out with some batteries that are twice as good as his battery after he builds a $5 billion plant to build batteries? That is there's a huge bet on the come for his batteries not being superseded by some Japanese batteries or some guy in his basement that sells the batteries that he's designed that are better to GM or, you know.
But that would make Tesla even better then.
It would.
Not that the battery part, but
but they've already sunk $5 billion in a battery company that makes no batteries, right? So to me, that's the critical flaw. You've got a huge hurdle in there that no one else makes something better in batteries than your battery.
So talk to me about space then.
He's going to, in fact, we're not going to have time to bring up net neutrality, which hit the things today.
Yeah.
But he's basically going to put up a ton of satellites. And, of course, every pound you put up there is like $10,000.
Okay.
So instead of putting up these $500 and $1,000 satellites, he's going to be putting up 250-pounders. And he's going to circle the globe with these little guys, and he's going to start selling Internet service. And, of course...
Oh, really?
Right. And I think that this is a big theme because, of course, we hear all about net neutrality.
Sure.
And the other thing is we hear people like AT&T, the head comes out and, I'm not going to put any more money into updating my Internet services.
They'll be out of business.
Well, I think the kind of stupid, I think it's short-sighted on AT&T's part.
Sure.
I think we've got people like Elon Musk,
right,
and we've got people like Google that are chomping at the bit to come in and clean these guys out because they don't want to end up being the same thing that Netflix is to Comcast. They've already seen what's happened to these guys, right?
Right.
The one thing you don't want to be is behind some wall where someone can just shut you off for whatever reason, slow down your service, or do anything else horrible to you until you cough up bucks.
I think next week that we got to talk about
net neutrality.
No, that and... Did you see this morning the Wall Street Journal? So the Justice Department has all these Cessnas going around the United States and they're collecting all our phones.
You know, that's been kind of known. I was surprised that it had been broached before.
Yeah.
And at that time, the Justice Department denied it. So
did they?
People kind of knew about it before. And, yeah, that's the overriding legal principle is called dragnetting. And since 1950... it's been illegal, and every single case...
It is illegal, I know.
And every case has gone before the Supreme Court.
The FBI has to go in to get your phone. But the bottom line is that the Justice Department, which FBI is part of it, has decided to just take everything.
Right. It was actually the Marshal Service in this instance.
That's even crazier.
Yes. So
Wyatt Earp.
Yeah, it is.
The Wyatt Earps are going to try to take us over, folks. That's not good.
Go to the front page of TFNN, look under newsletters, check out my newsletter, The Tech Insider. I had a big day today.
That's a beautiful thing, brother.
You bet.
And always remember, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it, step into it, take ownership of it, and fly with it. Thanks for being here. Have a great weekend, safe weekend. Thanks, Dave.
You bet.
Look forward to speaking right here next Monday. Go get them, folks.